Here in this video, we're going to get into my final delivery estimates for Q4. These delivery numbers will be coming out at 9 o'clock in the morning on Tuesday, the first day of trading for this upcoming year. And I think Tesla stock, following the last 2 days of selling, as you can see here, some pretty big red candles, is really set up in a way to potentially benefit big time from a beat to the estimates. Now, we're going to go over what the estimates are, and again, what my estimate is as well. We have been pretty much spot on the last two delivery estimates. We're shooting for that same result this time around, but we'll have to wait and see. It's really going to come down to the US when all things are said and done. We have pretty good numbers on the rest of the world, especially at this stage, but the US is a big wild card. So if you guys have any additional insight to provide, maybe Tesla lots near you guys, are they full, are they empty, what's the inventory look like around your area, source that information down below in the comment section or on the X account at Michael Tyler. Go ahead and respond to the latest tweet that was put out over there. Now, nonetheless, we are going to get into some broader market things as well here in this video. Something I just discovered is a pretty good indicator that the markets are in a healthy place. And I want to share that with you guys here in this video, as well as many other things, including what Dan Ives just said about our markets heading into 2024. So let's get into it. Thank you for watching. Let's get started. So let's start with this from Dan Ives. He was on last call on Friday, and he said some pretty exciting things for the broader markets, although I'm not exactly in alignment or agreement with what he said. But he's a top 200 analyst in the world, so I would probably listen to him over me. But hey, it is what it is. So we'll play this and then talk about it a little bit more and then get into this indicator, I think, is really what it comes down to. That is a really good sign for where we are in our markets.
Quickly, any macro market prediction for next year? I know you're an analyst on stocks. But any macro view?
I think tech stocks, and you talked about before, with Craig, but I think tech stocks are up 25% in 2024. Mag 7, we have up 30%. I think it's going to be just another, what I believe it's a get out the popcorn moment. It's the start of a new tech bull market. Tech will lead. And we believe this is really going to be a multi-year tech bull market.
And if that's quickly, any macro?
So essentially, he thinks that tech stocks are up 24% in 2020 or 25% in 2024. Magnificent 7, he thinks, can go up 30%. I don't exactly agree with that. I think you really just want to be in interest rate sensitive names. I think small and mid cap stocks really where you want to be. A stock like a Tesla that is very interest rate sensitive, that's also where you want to be. Not a big fan of Magnificent 7 stocks. They're already at all-time highs. Their valuations are definitely on the stretch side. So this indicator that I'm speaking of is really a combination of multiple indicators at once. Now, this first one is the insider buy/sell ratio for the entire United States stock market for CFOs. Now, here you can see right here is where we are at 0.14. Typical is 0.10 to 0.46. The max we've ever seen is 2.16. You hit these levels during like '08, right? You hit these levels during the Rona, where essentially CFOs, chief financial officers, you do not want to see them selling stock. That's usually not a good sign. So the lower you are here, the more bullish potentially they feel on the economy and on their business going forward. And right now you're at some of the most bullish points we have been at pretty much ever for CFOs. Now let's look at CEOs. Again, another insider you do not want selling stock. And again, they're not selling stock. Look at what happened during, for an example, May of 2022. When things had just started to get pretty dang rocky. And what happened? Well, a lot of CEOs were selling stock during this time. Now you're at, again, some of the lowest periods you have been at. Year over year, CEOs selling stock is down 53.33%, even though most of their stocks are probably doing very well on a year-over-year basis. So I find that very interesting. And then you can see insider buy/sell ratio for the US overall market, again, sitting at very low levels, whereas in May of 2022, this was at 0.8. Today it's at 0.3, which is on the lower side of the historical average, down 38% year over year. So, I mean, insiders, CEOs, CFOs, they're not rushing to sell stock. So regardless of what you might hear on earnings calls, regardless of what you might hear from, some people on Wall Street, you want to watch the money more than anything else. And the money is not rushing to sell stock, right? At least insiders. These guys have the most information about their companies. If they're not selling stock, that's usually a good thing, because you tend to see this spike during recessionary like periods or during severe turbulent times, right? And it's just not. This was 07, 08. You've seen this starting to spike long before there was ever an official problem in, April of 2007. Right? And then you've seen it continue to spike. Same thing back here in 2011, when a lot of people thought there was going to be the double dip recession. Same thing back here in 2016, when Trump got elected. Same thing in 2018 with the China trade war. Same thing during 2020. So you're far from a spike right now. This, I think, is one of those silent indicators that says there's probably not a recession coming. There's probably not this big problem that is brewing under the surface. Tom Lee with Fundstrat, he believes S&P 500 could rally about 10% next year. He does think small mid-cap stocks could rally 50% next year. That's really with your interest rate sensitive name. So if IWM goes up 50%, Tesla likely does over 100% yet again for next year. That would put Tesla stock by far at new all-time highs. Now, he says, here's a signal, friends, for IWM. He's sharing this. It says 90% of S&P 500 small cap 600 stocks crossed above their 50-day MA 3 different times in the past month. Since 1990, the sequence happened only 11 other times, and robust forward returns. A year later, 100% of the time, you were higher. The average return was 24.4%. Average max gain was 29.3%. Average drawdown of negative 3.5%. So this tends to be a very good sign when you're getting this breadth thrust here in our markets. But still, at some point, expect that we will see, to some degree, a pullback in our markets. Charlie Bolito, he's a chief market strategist at Creative Financing, or Creative Planning, my bad. He says active managers had less than 25% exposure to equities in late October when the S&P 500 was at 4,100. This week, their equity exposure jumped over 100%, so they are leveraged to the long side, with the S&P 500 approaching 4,800 and a new all-time high. This is the highest exposure since November of 2021. Doesn't necessarily mean stocks need to come right down, but it does mean at some point there will be a pullback, and that pullback could happen really any time now. But you could also make an argument that the beginning of 2024, there's going to be this catch-up effect where all of these firms and funds have been underperforming the S&P, the NASDAQ, IWM, and they need to get allocated to stocks in order to outperform the markets in 2024. You cannot afford to underperform again in 2024. And this is where banks predicted the S&P 500 will end the year at the start of the year. BMO at 4,300, that was the highest estimate. Morgan Stanley 3,900, Barclays at 3,725, Citi, Bank of America at 4,000 apiece, HSBC at 4,000, Goldman at 4,000, Credit Suisse at 4,050, RBC at 4,100, Wells Fargo 4,200, JP Morgan at 4,200. They were all wrong. The S&P actually closed at 4,770, and the only guy that got it right was Tom Lee with Fundstrat. He nailed the year-end target for the S&P with a prediction of 4,750. So when he thinks small cap stocks are going to give you 50% returns next year, I mean, I think he's a little more credible than anyone else out there on Wall Street. After all, I mean, that's the logical argument when small cap stocks are trading at some of the lowest multiples we have ever seen them trade at. There's either going to be a catch-up effect or a catch-down effect. The catch-down effect would be big tech falling and equaling the valuation of small caps, or small caps catching up to the valuation of large cap tech. And I mean, that's probably the most likely scenario if we continue to avoid a recession. Now, if we go into a recession, 2024 is going to be an ugly year, at least part of the year. If we avoid that, then you could see some monstrous gains. The latest estimate for Q4 GDP is 2.3%. This follows 5.2% in Q3. It looks like you can make a more logical argument that the economy is actually accelerating at this point, that maybe we were just in a rolling recession that wasn't deep enough or hard enough, no pun intended, to give you a broader, just economic recession. It was just different sectors, and some of those sectors that were doing well, leisure, hospitality, for a period of time, for an example, they kind of held everything together as far as the broader economic data. Okay, so now let's get into the final delivery estimate for Tesla. We might talk about this again, but we're gonna, just reiterate the actual delivery estimate that I do have. So here you can see a picture. This is US, Canada, Europe, China, and the rest of the world. These are numbers that we kind of already know, right? These are well-known numbers, if you will. About 100, well, besides the US, about 10,000 deliveries for Canada, 92,000 for Europe, 175,000 for China, and 33,455 for the rest of the world. So let's just go ahead and plop these numbers in. Specifically, first, I want to try to figure out a more realistic number for the US. Now, what I've found to be the most accurate, and we'll see if that's the same this time around, is about 30% higher deliveries for the US. Now, this time might be not as strong. Maybe not 30%, maybe it's around 25%. So we're going to go with 25%. And that would be 43,852 more deliveries than China. So you plus 175 back to that. And you could see about 218,000 deliveries for the US. And then if we go ahead and add 175 for China, and then we go ahead and add 10,000 for Canada, then we go ahead and add 92,000 for Europe, and then we go ahead and add 33,000 for the rest of the world. You're at 528,000 deliveries. Now, there's going to be a margin of error to this. There's going to be, some give back to this. Maybe US deliveries were not exactly 25%, maybe they were only 20%. In that case, that's going to drop you down about 10,000 roughly, right? It's going to put you at about 518,000 deliveries. I think you could have an additional margin of error there. I personally think you're going to come in around 510,000 deliveries. Could you come in higher than 520,000 deliveries? You could. But 510,000 deliveries is my estimate. That's a number I feel comfortable with. I think that's a good target that Tesla is likely going with. Now, I would be very surprised if we come in lower than 500,000 deliveries. Very, very surprised. Like, super surprised. We have a problem if Tesla comes in lower than 500,000 deliveries. Because that means the US is not doing great. Because we already have the numbers for China, for Europe, for the rest of the world, for even Canada for that matter. We already have these numbers. So the big wild card is really the US. So we'll see what the numbers ultimately come out at. Wall Street is currently estimating about 483,000 deliveries. So if the estimate's 483,000, and we come in at, let's say, 418 or 518,000, that would be Tesla beating the estimate by about 7-8% or so. That would put the beat at about 30, almost 36,000 vehicles. Now, minus, the almost 9,000 from here to get to my target, that would still be a beat of about 26,000 deliveries more than Wall Street is expecting. If that happens, I mean, it's hard to make the argument that Tesla's growth is decelerating, that Tesla's adoption is decelerating. I don't think you can make that argument at that point. And when so many people are bagging on the fact or hoping, for China to slow down and people to boycott Tesla and people just don't want to buy Teslas anymore, like you hear the bears say, that just doesn't seem like a logical argument at this moment in time, right? So, yeah, if this happens, if you come in at 510,000 as I expect, I think Tesla stock could easily rally about 10% in a single day, especially considering it's the start of 2024, start of a new year. 10% would put Tesla stock from current prices at about $273 per share. If you come in higher than 520,000, I think you could rally about 12 to 15%, although that's a little bit on the higher end, right? That would put Tesla stock at $286 if you rallied 15%. Now, if you come in less than 500,000 deliveries, I don't know if Tesla stock's going to go higher on that. If you come in at 495, that probably is still some good news, but that probably only puts you back into the low 260s. That probably puts you up 4 or 5% or so. Just as per my, estimates. If you somehow miss 483,000 deliveries, I don't even know how that would be possible. You would have to see some serious weakness for the US. Then you're in a very bad situation. Then Tesla stock probably falls about 5%. Coming the first trading day of 2024 on Tuesday, and you're going back into the 230s. Okay. I think that's a very, very low probability. I think the probability is over 95% that Tesla comes in above 495. I think the probability is about 75% Tesla comes in higher than 500,000 deliveries. So my base case is over 500,000 deliveries. Now, is it 510? Well, that's my estimate. That's where I think deliveries will come in. Could it be 507? Could it be 505? Sure. Any of those numbers would be welcomed. And again, I think Tesla stock would make it back into the 260s, if not the 270s. But again, anything over 510, that's really good. You're probably up 10%. Anything over, 520,000, you could be up as high as 15% coming on Tuesday. And I think the last 2 days that we've been falling, you've fallen about 5%, almost exactly 5% in 2 days. This sets you up for a large move coming on Tuesday, right? And you can make the argument that Tesla's already somewhat priced in a bad delivery number by this 5% drop. So yeah, we will ultimately see, okay? Let me know what your estimate is down below in the comment section. That's going to do it for this video. Thank you for watching. Enjoy the rest of your day. If you guys want to come trade with us live in real time as well, check out that link down below in the description of this video. You guys have a great weekend and get ready for 2024. I'll see you in the next one.